Good day, everyone, and welcome to our Street Co-op webinar today. My name is Nenad, and today I will present you Forex range bars regression system. This system, I have created this system, and because you're premium subscribers, you system indicators that I use for this system. You can email me, and I will send you a template and indicators that go with it. Before we begin, as always, our standard risk disclaimer. Online education materials are available at Armor Markets History for a global audience, so take into consideration that information in this session is not suitable for everyone. If you want to get a corresponding information on charting conditions and any other detail, you should visit Armor Markets Global and select your country, contact an appropriate entity. Risk disclosure statement stating all possibilities associated with Forex market. By accepting the risk, you're also proceeding further with me. And final part explained that Admiral Markets will take no responsibility for information accuracy. This is solely my opinion, and this webinar is for informational and educational purposes only. By logging into Admiral Markets Trader Room, you can download Supreme Edition, use it independently from your own expert advisor. It has a huge amount of tools, and you can use it for a limited amount of time as long as you have a live account. Up to 50% of deposit bonus is available at this time, and you can check out a web trader tool also at this address. So today's agenda will be range bars, advantages, then installation, how to install the indicators. Then I will go through a quick explanation of the indicator and the actual strategy. Because of copyright purposes, of course, I don't want material to be copyrighted and shared for free. I will explain the rules of this system on live charts, okay? So stay tuned. So what are range bars? You probably know that during my career, I've been a big fan of range bars, and actually I have created some systems back in time that use range bars, like for example FRB Pro, Forex Range Bars Pro, and that system was particularly very good in trading euro dollar. So I decided that I actually want to improve range bar trading a bit, at least try to improve by using some knowledge about price action, about channel trading, and about dynamic levels of support and resistance. And I have created Forex range bars regression system. Originally, of course, I was not the one who invented range bars. That was a trader named Vicente Nicolelis, a Greek trader, and in mid 1990s he actually wanted to negate the effect of time on candlesticks and on general trading, so he invented range bars. He also wanted to exploit volatility to his advantage, and using range bars you will always see a big number of bars. So when volatility is high, more bars will be printed out. When volatility is low, less bars will be printed out. Have in mind that that is a completely different dimension compared to other dimensions, such as price action, harmonics, indicators based, and so on. Range bars uses completely different calculation. The amount of time for a range bar to be actually printed out, it's not relevant. So range bars are focused on the price itself. For a range bar to be valid, each range bar must have a high-low range that equals the specified range. Each range bar must open outside the high-low range of the previous bar. And each range bar must close at either its high or its low. So those are qualifications for a range bar to be valid. For example, we can use 10 pip bar or 25 pip bar or a 5 pip bar. If you use a 10 pip bar, that will print out new bar every time the price moves 10 pips up or down. So if you compare this chart to traditional price action, you will find that really time is not relevant. Because on range bars, you don't care whether it will be printed out on a minute chart in a minute or it will be printed out in an hour. But you can use that kind of information to actually give you the cue for volatility. Obviously, if you see a lot of range bars that are printed out in succession, let's say that 5 or 6, 10 pip bars are printed during a minute, you will know that there is a huge volatility in the market. Conversely, if you see that 1 or 2 10 pip range bars are printed out during a couple of hours, you will know that there is a extreme low volatility in the market. So there is general consensus that range bars are actually used to measure the volatility and to gauge the momentum. But the real truth is there is no noise. Now, for some traders, actually, it's good to see the noise. Of course, for me, I like to see the noise in the market because if I see the noise, it will tell me stay away from the market. So actually, I don't mind the noise because if I see that euro dollar, for example, is not tradable, I will use other pairs, let's say pound Swissy. There are a lot of different markets to trade. So for some traders, that actually might be an advantage. Because if there is no noise, that means that probably our system that uses a range bar can give us some good setups. It's not necessarily that, and because of that fact, you need to use filters. Some traders, for example, future traders, they tend not to use a lot of filters for range bar trading. Equity traders are stuck because equities move much more faster than Forex market does. And the problem is that, especially guys, if you use custom indicators for range bars, MT4 platform is not handling those range bars indicator quite well. So you might see your screen stuck or frozen during the extreme volatility. And equities often show extreme volatility and price movements. To the contrary, Forex pairs don't have the same volatility as equities. And it's much easier to trade on Forex market, and it's much easier to spot patterns, especially if you are not an advanced trader. If you're a newbie trader, it's still good to watch for range bars because, as I said, it's much easier to spot patterns. The price on range bar completely negates the movement of time frames. So range bars don't have a time frame. Okay, that is what you should remember. There is no time frame for range bars. Range bars will only print out when those rules are met. So if you set the rule of 4 pip range bar, only when price moves for a 4 pip, next bar will be printed out on next pip. So let's compare two charts. So this is standard price action chart, and this is actually 4 pip range bar chart. So the same movement, right? But you see how it's different. This price is a bit nasty here because you see a V-shaped reversal. And then after a V-shaped reversal, there was actually a move to the upside. But still, you can find it a bit nasty. So this kind of movement can be bad for traders who actually trade lower time frames, because chances are that they will be stuck in a trade, for example, a short trade, and they will not be available. They will not be able to enter a new good short. V-shaped reversal is a bad thing, guys. But you see, on range bars, there is no V-shaped reversal. We cannot find it. Why? Why? Because actually, range bars captured just the pip value, not in the sense of money, but the pip value per pip. So if this is indeed 4 pip movement, you see how price respected 4 pip movement. And here, actually, it confirmed the entry to the downside. Up to here, there was an up movement. Starting from this point, we saw a drop. This was much harder to trade than this one. So let me tell you that range bars is also suitable for scalpers, especially if you like to scalp on a low. Now, don't get me wrong. I already explained that time frames are not relevant to range bars. But guys, there is a logic. If you like to trade on 5-minute time frame, you will love to trade M4 range bars. If you love to trade 15-minute time frame or 1 hour, you will love to trade 6 pip range bars. If you are a swing trader that trades 4-hour time frames, then you can set a price to be 20, 25 pip range bar. Some people do it even like 30 or 50. It will depend from a pair to pair, has range. Euro dollar is not the same as pound yen, right? Nor the pound yen is the same as Euro New Zealand. Nor the Swiss yen is the same as Euro Aussie. So you need to see whether the price is moving fast, and then you can decide about the range bar calculation. The system that we use today is based on both trend setups and counter trend setups. So there is no breakouts, there are no those kind of things. So you will either trade trend-based setups or counter trend-based setups. This is, guys, the installation. As I already explained, if you don't have the indicators, you can ask me and I will send you the indicators for this system. But the thing is, I want to be clear with rules also, so I will tell you the rules just after we finish this. You need to know about the rules because it will definitely make you either a good range bar trader or a bad range bar trader. Ultimately, you don't want to be stuck with something that you don't understand, guys. Okay, that is very, very important for you. You don't want to be stuck with something that you don't understand. And for range bars, there is a learning curve because it's not just watch range bars and trade as the system tells you. You need to get into the system, and you need to be especially observant with I-Regression channel. And during the webinar, I will explain why. So go to File, Open Data Folder. That is MT4 platform. And don't ask me for other platforms. I don't have the indicators for Ninja or for other platforms. I don't I simply trade on MT4. And I've had great results with MT4. So I will not change it. Okay. So go to File, Open Data Folder, put indicators in MQL indicator folder of your MT4. The indicator range bars, expert advisors should go into MQL experts folder. So your expert advisor should go into this folder. Put a template folder into templates folder, or put the indicator into template folder. I, I will with the indicator, so you should just place it into templates folder. The process which shows range bars on chart is pretty simple. So let's say you will trade euro dollar, but you can use this for every pair you trade. First, drag range bars from expert forward to euro dollar 1 minute chart. You can snapshot the screen. I will also show you this on live chart. Then in settings, put range bars 6 and time frame 6. This time frame just is used for offline time frame, because MT4 will identify your euro dollar 6 pip range bars with this setting here. Go to offline and open euro dollar M6, apply the template to the chart and have it running. You should know and be wary that range bar script should run on 1 minute chart only. Okay, so let me show you the screen now. Okay, here, this is the screen, and this is the indicator. So range bars expert advisor indicator has been placed here. Okay, here you see, you should always have auto trading running, because this is what will show and make your expert advisor run. Now, if you go to expert advisors properties here, you will see that bars range is 6 and time frame is also 6. Now, don't be confused. This is not time frame in the real sense. This is just a reference for this expert advisor to show you actually that this euro dollar 6 pip range bar can be found under offline. Put also max bars to 10,000 and leave it as it is, true, false, and this should be like this. So don't move it. Go to File, Open Offline, and scroll down to euro dollar M6. So the time frame actually reflects this, M. If you put time frame, let's say 10, it will show euro dollar 10. So why I put 6? Because you will use 6 pip range bars. It will be easier to identify 6 pip range bars as time frame 6, or 2 pip range bars as time frame 2, and so on. Okay, here this is your, so when you go File, Open Data Folder, File, Open Offline, then euro dollar M6, okay, you will see this chart. Just right click the template and apply the template. When you do it, you will see this screen, okay? Now the indicators, guys. Which indicators we use? I-Regression, and these are settings 2, 2, 0, 500. EMA 144, EMA 50, stochastics 1433, low, high, simple. These are the indicators. Okay, here, if you do with indicators list, you can find this. Polynomial degree should be set at 2. Standard deviations should be set at 2.0. 500 bars in window. Bar shift, historical shift. I will explain this later, so this is not valid now, but I will explain during the webinar why historical shift is important. Okay. Stochastic is 1433. Moving average 144 is blue, exponential. Apply to close, of course, and this is also applied to close, 50 exponential red. Okay. Now the indicators explained. We will use I-Regression as a dynamic support resistance indicator. We use 2 parallel lines that will make up for dynamic support resistance level. It's 2-degree regression that will make channel more steady, and 2 standard deviation will make it more suitable for rallies and dips. Now, the important part is the repainting factor is very small when you use 1 or 3 bars. Okay? The thing is, this is important, guys. If you set this indicator to 4 polynomial degree, it will make more curves on the chart, and it will actually, the price will actually be more pronounced to repainting, not the price, but the channel, to repainting. When you set it on 2, you won't see repainting. But have in mind that I-Regression follows the price. It's adaptive channel. So what you will see is, that is why historical shift is used, to actually backtest it. So when you place historical shift like 20, for example, you will see previous how indicator looked like 20 bars in the past. It will adapt to the price, but at the same time, it will be very good to you to actually take the trades from it. Okay, so this is just for backtesting. Enter a random number and watch how the indicator behaved that amount of bars earlier. Default is 0, of course. So this is just used for backtesting. Here, so you will not see a lot of, there is no repainting. There is only that this channel might be a bit adjusted in the past, that is in the present. But because we use 2 polynomial degree, it will be accurate. Okay? So that is important for you to actually understand that part. Also, guys, if you use 3 or 4 or even more, the indicator will adapt more to the past, and you will see a huge, let's call it repainting. But that is why the indicator adapts to the past. So this is how the indicator should be used on default settings. Okay? EMAs are used for major and intermediate trend. 144 EMA is very good towards range bars, and you will usually see price respecting the trend on the 144 EMA setting. But also what is important is that we need to use another EMA to shift the trend, because major trend is not important. It's not only important thing. You need to know now moment. If you listen to my other webinars, you will notice that I always take historical versus now moment price action into consideration. So this is historical trend, this is intermediate trend. If you watch 144 compared to 50, you will see historical versus now moment concept. And that is used for pullback. We always wait for pullback. And ideally, you want to see well-aligned diverged EMAs, not spirals and convergence for your trend. Stochastic is used for sell or buy confirmation. Above or close to 80, we should sell. Below or close to 20, we should buy. 14.33 is the default setting. And 6 pip range bar is also the default setting for your system. Okay, guys? So that is what you should be focused on. I did this, as I said, I did this by my own, and I tested it, so it should not be experimented with. It's been tested on these settings, so guys, just be focused on these settings as I was telling you. So this is I-Regression channel. This is EMA 44. This is EMA 50. This is the bottom of I-Regression channel. And this is stochastic, as I said, 14.33. So the rules will be explained on live chart, so pay attention. And if anything, guys, is not clear, of course, just tell me and I will repeat it again. So there is nothing to be worried about. Okay, so let's use a live chart example. So we can see Euro M6, okay? It's not the time frame, so don't be confused. It's actually 6 pip range bars, okay? 6 pip range bars. You see? At the bottom left corner, you can see 6 pip range bar. So let's see the rules. The major rule is we want to trade with a trend. There is the first degree trade and there is the second degree trade. The first degree trade happens when price actually hits the bottom or the lower part of the channel. If you see it like this, red, okay, like this, you know that the trend is to the downside. Okay, blue above red means that the trend is to the downside. The first degree trade is when the price hits or comes extremely close, as in this example, or it hits the upper part of regression channel. Okay? Then you need still to have these EMAs aligned, but not converge like this. This is not a good setup. Although it was good for some pips, it's not good setup. I stay away from this. This is the ideal scenario. And if you see in now moment that the price is showing you a hit, a touch, or extreme closeness to the upper part of I-Regression channel, be prepared for a sell trade, as here. Your initial sell is when stochastic crosses from 80 or at least close to 80. Here, this is a cross. And if the actual candle is bearish. So this is the entry for a sell trade, guys. Okay, this is a clear sell entry, you see? 100 pip pull potential. Now, where to place stops and targets? Remember, guys, this is the first degree trade. I will explain about second degree trade, and this is trend trade setup. We also have only first degree counter trend setups. So for this kind of setup, this is the earliest possible trade you can make. Stops go below last obvious swing high. So this is the last obvious swing high. So 5 pips above last obvious swing high. So here, so it's like 22 pip stop loss, right? So no, let's say this is, okay, here, 26, so it's like 31 pip stop loss. Your first target should be the most obvious support. So we don't use pivot points with range bars, we use price action. So price action tells us that this is the most obvious support. So this is the first target. But you don't close your trade after the first target is hit. You go towards this. This is your second target. This is your third target. So once price breaks this, you can wait, you can close your trade, you can scale out. But what I suggest is to move your stop loss from this part to this part. And if this level is hit, you should wait a bit until price either goes up or down. If it proceeds down like this, you move your stop loss from this point to this point. And your final part is this. You should not wait for the perfect touch of this bottom channel. You can close your trades here or there. It's already enough, guys. See? Huge pip potential. Second degree setup happens when price actually does not hit, or it's not very close to the upper part. This is sell example, at the upper part of the channel. So this is a second degree trade. This is a second degree trade. So the price didn't make it a great pullback, the first degree trade towards our channel, but it's somewhere in the middle. Okay, so second degree trade can be good if the price is up to 20 pips below or above this upper or lower channel. So in this case, we have a setup and it's like 12 pips, so it's second degree trade. And actually you take your trade here. So this is your first, well, it corresponds to this line. So this is your first target, and this is your second target. If the price does not want to go down, you will see a momentum range bars like this. So you can opt for the close of a trade here. Okay. So there was like 40 pip potential. I would place stop loss 5 pips below this high here. So it's simple. See, it's very simple, and it's also suitable for beginners. Okay, you see a lot of second degree setups. We have the sound now, so I will continue where we actually lost the sound. So here at this part here, you can easily see that we actually have huge number of pips. We need to share the screen, yeah, of course. Let me give you the screen. It should be here. Okay, now we can see the screen. And actually, you can see from this example here, there were a lot of pips to be made with second degree setups. But be sure that you should always measure, the pip difference. Okay, if it's at the margin, you can actually try to trade it like this. But if it's below the margin, then you don't trade it. I would never ever take this setup. Now, that is about the first degree setups and second degree setups. Now we should also talk a little bit about counter trend setups. Of course, counter trend setups should be taken only if you are familiar with the pair, with the movement, and so on. Because the problem is, trend is always your friend. Remember it. Big institutions, how I call it, big fish, they make the trend. But other retail traders are simply following the trend. Okay? So you want to follow the big fish, you want to follow the shark. Counter trend trades can be taken with the system, but it's up to you. I usually go with normal trades. Now let me show you how you make actually counter trend setups. I will remove these lines. So let's say that this is a downtrend. We already said this is a downtrend, right? And the only way you can make a counter trend trade setup with this system is by using trend lines. So when price hits the bottom part, draw a trend line. Okay, this is it. Trend line, trend line, trend line. At this time, this was now moment, right? See, the price hit and started to go up. Follow the price. You see, there is now an obvious trend line here. I should ray it out to actually see what happened. Okay, And what happened is actually here. See? So once the price breaks through the trend line here, that is your buy signal. As I said, guys, this is up to you whether you will take counter trend setup. I usually go with trend setups, but this is the rule. And very often, even counter trend setups with Forex range bar regression system will give you some nice pips. Okay? So this is how you can do it yourself. This is not hard, but it requires some patience, and it requires some chart attention. Definitely, guys. Okay? So if you do backtesting, as I already explained, you should do it like this. Indicators list, I-Regression indicator, then historical shift. And just count the bars and place it. So if you wanted, for example, to see where the price was, where the channel was, here, for example, you count the bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Let's say 30. It doesn't matter. Maybe we're wrong, but let's say like 30. Just for example. So place historical shift here. 30. Okay, see how the channel was. So this is good. This is 2 polynomial degree channel. If you use 4 or 5, it will be different. So guys, this is everything. I was pretty clear. I was pretty concise, I hope. So if you have any other question, of course, don't hesitate to ask me. If you want this system, you need to send me an email, and I will send you for free. Of course, this is premium webinar, so you will receive it for free. This is my email. And if anything is not clear, of course, don't hesitate to ask me. So I don't see any questions. So I guess that everything is clear. Of course, I invite you also for my webinars that are free for all at Admiral Markets session recaps that I always post prefect setups. So I hope that you have enjoyed this. I wish you to trade safe. I wish you to trade well. And I will be here with you soon. Cheers and trade safe.